Hi all, welcome to TCM Education. My name is Michael. I will be your mentor and your analyst for this 15-minute video. This video is purely for mentorship program for beginners. So if you are an experienced trader, this is not for you. If you are trading and you know what you're doing, it's not for you. If you are a beginner and you are in the process of thinking about becoming a day trader and you don't know what you're doing and you're having your doubts, this is for you. So let me again introduce myself. My name is Michael. I'm a day trader and a mentor for the past that's nearly 20 years. I started just before the crash in 2008. I mentored many students throughout my career and traded for nearly 15 years. Now my business is mentorship programs and growing my YouTube channel. That's my business right now. As I have specialized after being in front of classes, most of them of course online, that day trading is flying or driving or basically doing a manual labor. Of course you need some brain as well, but the best way to learn this very unique let's call it a skill is through a mentorship. And why is that? Because it's, like I said before, it's like driving or flying. You drive a car, you're not driving with 10 people driving alongside you. No. You're flying, you're a piper at the beginning. You're going to do it you and the instructor. And the instructor is not doing anything other than telling you what to do in order not to crash. So here, we're not going to crash. Worst case scenario, you're going to lose some money, but that's part of the program of learning. When you learn how to fly, you pay. When you learn how to drive, you play. Anything that, any skill that you want to acquire and want somebody to teach you, you need to pay for it. And sometimes in flying or even in driving, you make a mistake, you pay with your life or some serious injury. That's not going to happen here. But obviously it's a joke. Nobody wants wants to crash a plane or a car, and you're not going to crash trading. Now trading is complicated, and we need to unravel what is basically day trading. Day trading is a definition of what you make it. Okay, so flying, you fly from point A to point B. There are regulations. People are observing you on the way. If you, I don't know, fuck up, don't fly according to regulation, they take your license, and that's it. You cannot fly, and you fly, you go to jail, stuff like that. That's the same with a car. In trading, nobody's governing you. You are all alone in front of your charts and your computer. You're making your own decisions. If you're doing it with other people's in the background, you can't concentrate. It won't be an ideal environment. The ideal environment is that you using your brain and your skills to make better decisions. As a beginner, you're not going to reach good decisions. Let's take a look at the chart, because day trading is looking at the chart, while investing is looking at the numbers and sometimes looking at the chart once maybe a day, once a week, whatever. Day trading is all about charts. There's nothing else matters. Okay, you are day trading, you're trading between 9:30 and 4 p.m. That's 6.5 hours. You need to be in front of the chart. If you think that you can be successful day trading half an hour or an hour per day, forget about it. That's bullshit. Okay, just need to say the right word. You cannot day trade from the beach. You cannot day trade sipping margaritas. This is a job, and if you do it right, after 6.5 hours you can go to the beach and sip deep sip margaritas. So it's a job 5 days a week times 6.5 hours plus some pre-market and of course a break. But overall it's regular, not 9 to 5. It's a different type of job where you need to apply yourself. So again, the definition of day trading is very, very wide. It's what you make out of it. So it's like a mom and pop shop from, I don't know, 30 or 40 years ago. The mom and pop shop or a coffee shop that doesn't belong to Starbucks looks like its owner. There are amazing coffee shops that don't necessarily belong to Starbucks as much as there are amazing burger joints that don't belong to McDonald's or Shake Shack, for example. So what do you do when you want to start day trading? Okay, first of all, you need to understand that you need to apply yourself for 6.5 hours per day. If you cannot do it and you think you'll get by trading an hour a day here and there, no, it won't work. Don't do it. Just start when you're ready. Also, if you live in the US, you need at least 25 grand. If you are sitting in front of a computer in the US, you know that day trading requires at least 25 grand, meaning you need to start with 30 to 40, which is a good thing because you start with capital. If you live outside of the US, you can start with 10, maybe 15. And sometimes you will get leverage from the broker, which will match your buying power in the US. So again, I'm talking to myself right now and hoping that some of you are from the US. That's the best scenario. Also, those are the cheapest and the best platforms. Those who live in Europe, Israel, the Far East, I know what's going on in Europe and Israel. I don't know what's going on in the Far East, and obviously I don't know what's going on in Arab countries and whatever, or Australia, if it's even possible to day trade the US markets. Regulation and stuff, Russia. Okay, so again, why are you watching this chart? Because this is it. If you watch this chart of Southwest Airlines, LUV is the symbol for Southwest, that basically encompasses what day trading is all about. It's about taking advantage of opportunities. Sometimes the opportunities, let me pinpoint the opportunity, are coming in the morning session. Sometimes later on in the day. Sometimes there are no opportunities. And sometimes the opportunities appear again. And again, those are my opportunities, the way I teach them, but with time, everybody will develop its own personality, would love some of the opportunities that are being taught during the mentorship, others won't like. The basics are on this mentorship, and why do you need this mentorship is that trading, if I didn't pinpoint it so far enough, it's about focus. You need to focus. There are 6,000 stocks. That's a huge number, okay? 6,000. Obviously, at the beginning, you cannot focus on 2, and you don't know which out of 6,000 are the ones that you should be focusing on, obviously. So this is the first part of the mentorship, which is only 8 hours and another 10 hours of follow-up. So the mentorship is 8 hours one-on-one, and then 10 hours Q&A also online. The hours are not really that important. Obviously, they are live hours. But the idea here is that if you're coming to the mentorship, you're trading. You have to have a platform and trade. It doesn't mean that you need to trade 5,000 shares per position, but you need to trade as much as you get on board a plane and fly, or you get behind the wheel of the car and drive, and the mentor or the driver or the test pilot sits near you, alongside you, but you will drive. Because if you don't do it yourself, it's never going to happen. And there are ways to prevent yourself from crashing. Okay, but you need to do it. You need to actually pull the trigger. Okay, so now after I talked about focus, let's see why you need to focus on a very, very small number of stocks out of 6,000. First of all, let's say we pick at random 3 stocks out of 6,000. What are the chances that those 3 will be the best trades of the day? 3 out of 6,000. It's not a very good chance. Okay, so now we need to eliminate with a smart screener the stocks that we don't want to look at for whatever reason. I will explain. So in the US markets today, there are let's say 10 stocks, we'll see the number immediately, that are moving up more than 10% per day on the upside, and 10 stocks that are moving down more than 10% per day to the downside. Only 10 up and 10 down. I said 3 or 10. A very small number of stocks that are moving up more than 10%, and a very small number of stocks that are moving down more than 10%. Those are most likely will be the stocks that will move the most intraday. And as a day trader, assuming stocks are shortable as well, which is not 100% true, but all the stocks are buyable. 100% of the stocks are buyable, not 100% of the stocks are shortable. But let's say for the sake of arguments that all of them are shortable and buyable. So from this pool of stocks, those are the stocks that will most likely develop the biggest intraday range. Remember, you are a day trader. You start buying, if you're lucky, at 9:30, and you'll sell your last position 2 minutes before 4 p.m. and then you start fresh the day after. That's the job of a day trader. If you're not doing it, you're not a day trader. You're something else. Okay? Maybe a swing trader, maybe an investor, but you're not a day trader. So the day trader, this is the definition. Okay, so the definition of a day trader is that you can sell inside the trading day many positions per day. Some will tell 25 positions. I will say anywhere between 5 and 10. And others will say, no, I'm doing only 2. Okay, that's fine. Okay, that's going to be up to you to decide as a potential trader. But again, the idea here is that you focus on a very small amount of stocks, and those stocks are those that are most likely to develop into big intraday movers. And those out of those stocks, you need to observe the chart. I think in the future AI will do it to a degree or another, and enter the trade. And if you fail on the trade, you need to fail very small. That's your job as a trader. That's it. Now if you succeed, your only job is to do nothing. That's the strategy that I'm teaching. Don't do nothing if you succeed, and protect yourself very fast with a plan if you fail, if you are ready to fail. So let me show you an example. Let's say, and I won't talk about entering a trade early, which is only for experienced traders. Let's say I want to short this stock, and the symbol is LUV. Let me bring in the chart. Okay, let's do it very slow. It will take some more time, but doesn't matter. I want to short the stock at 34. This is the entry at 34. Why 34? Because that's another rule of mine, that I'm shorting and buying. Most likely, most of my positions will be at round numbers, only at round numbers. Why? I can explain, but won't do it right now because it will take a lot of time. But I want to short at 34. I believe that the stock, which is very, very weak, it gapped down, so it did this move in the pre-market, then it continues lower, and then it reversed, and I won't discuss the pattern, but I believe it will break 34 and continue to trade lower, and maybe reach 32 by the end of the trading day. But my question is, okay, I'm going to short or sell at 34. I assume that everybody knows what shorting is. What is the risk on the trade? Can I take a risk of $2, $5, 10 cents, 5 cents? What is the risk on the trade? So the idea here is that if I can find a stop loss which is less than 1%, meaning no more than 34 cents. 34 divided by 100 is 34 cents. So I need to risk only 1% max on this trade. That's the strategy. Again, some people that hear me don't agree. Others love it. Others say, I don't want to risk 1%, it's too much. And others say, I trade without stop losses. I don't care what you do when you're after the mentorship, as long as you are successful. Anyway, the risk is 1%. So now you have to force yourself to find a stop loss of 1%, but it cannot be a random 1%, because if it's a random 1%, you can enter any trade and say, okay, Michael said 1% of risk will be fine. It should be backed by the chart, because this is also the chart channel. So let's take a look at this example. The stock basically, let's see, dives here at the lows. You can see a lot of support here, breaks higher, and then turns around. This is the high of this move. Let's point it out. This will be the stop loss. Okay, so this will be the risk. Is this 34 cents? I see way more than 34 cents. Let's see how much is it. Let's see, the risk is 68 cents. So actually it's double the 34 cents. Meaning I cannot take this trade according to this strategy, to my strategy. I cannot take the trade. Why? Because the risk on the trade is twice. Now in retrospect, was it a good decision not to take the trade? Of course not. The stock took a dive from 34, ended up at 32.40. Now it's whatever it is. But obviously it would have been a successful trade, but it doesn't fit the strategy. So again, here you're fighting with yourself how to fit a strategy, if you agree. That's why I'm teaching. The strategy to your personality. So why is it important to have a strategy? Because if you let yourself go and say, okay, stop loss of 2% per position, it's not my whole account, it's only per position, it's not a big deal. Okay, but you're a beginner, so your eye is not very keen. You may not land in the middle of a runway. Again, when you fly, you may hurt others and maybe hurt yourself. Here, you're gonna hurt your pocket, and if you hurt your pocket too much, you will, give up on this business, and that's shameful because you don't have unlimited resources. Nobody's Warren Buffett here. Okay, so we are away from this guy as far as possible. Anyway, but we can be successful doing the Warren Buffett intraday, meaning staying in a position as much as we can. Meaning we want to take the position at 9:30 or 10 in the morning and stay until 4 p.m. Obviously, we don't want to stay in a losing position. Therefore, the risk on each trade shouldn't be more than 1%. And this is our job now, to find, with the trend of the stock, a trade that in LUV, an entry point where the risk is less than 1%. And I will show you one already. Okay, so let's go back to this yellow line, which is important, and you can see the highs of the yellow line is here 34.60, and the yellow line is 34.45. So that's only 15 cents. Now the risk, if I'm taking this trade short, observing this resistance pattern where the resistance is 33.60 is only 0.5%, which is half of 1%. Now I'm talking business, so now I can take the trade. So I will take the position, let's say $10,000. I'm going to risk 0.5%, in this case $50, but my stop loss will still be 1%, $100, because that's how we trade, and I will let this trade go short at 33.45 and wait until the end of the trading day. And if it drops to 32, I will be a big winner. And if it comes back to the entry, I will stop out at the entry. And how do I manage this trade is not really that important right now. It's very, very simple to manage. But this is the concept, okay? The concept is that you take very careful trades based on a closed list of stocks, and I will show you the list. It's called, for this example, it's called the daily power list. And you can see it has, hold on, that's not it obviously, it has 23 matches. And as a beginner, you will look only for 10 matches. And there's obviously a very easy way to dwindle down or cut down on this number of stocks, and you look only on 10 stocks. At the beginning, you will take 1 or 2 trades per day, and you force yourself to take only those that are according to the book 100%. And after 3 months, you will be able to take 4 trades per day. And the idea here is that you risk 1% per trade, and you are doing terrible, so you're going to lose 3 out of 4 trades. So 3 trades will lose you 3% out of a position, and we'll talk about what, not your whole account obviously, out of a position which will be most likely 1/5 of your account on average. And if you apply yourself to the strategy, you will have 1 trade per day of anywhere between 3 and 10%. And that's it. And after 3 months you will improve yourself, and after another 3 months you will do 4 or 5 of this type of trades every day. And the numbers will pile up exponentially if you do it right, and if you don't cave to losing more than 1%. Okay guys, this is a first lecture about the mentoring sessions here at TCM. Hope it was illuminating enough, and thanks for watching. I will be available for questions. Just email us, and we'll do the rest of the job for you. Thanks a lot. Do like and subscribe, and we'll see you in the next video.